Good evening. I just wanted to let you know that this class is about small business, and I'm just going to share with you a small part of information concerning small businesses. Now, as you know, the small businesses are the backbone of the country. The majority of the employees are employed by small businesses versus the large corporations. Xerox, IBM, they might have their 100,000s of employees each. But the small businesses, the majority of the 132 million employees are employed in a small business. Now, most small businesses are not what you might consider a mom and pop operation. They are normally a business that's started by an entrepreneur, a person desiring to take the risk, high risk, to make a high profit. And when I say high risk to make a high profit, I'm not talking about illegal risk, because the economy, the problems that we've saw in the economy in the past 2 years, that was predicated by the mismanagement in the financial industry as well as the real estate industry. The high risk and high profit is just the incentive for most business people to conduct business. Now, the Small Business Administration is available to help anyone with their desire to start up a business. They will help a person source out funding, capital. They will help provide the person with a mentor, the Retired Executives Program. So the Small Business Administration is geared towards helping a person create a strong strategic plan, source out the financial needs that they might have, and then also be mentored or coached by a retired executive. The main reason for most small businesses' failures is access to capital. And then if they have access to capital, the ability to generate revenue. That is the other component, key component to small businesses. So I'm going to walk you through some revenue generating ideas. And basically, a person will develop a plan, a business plan, and within that business plan you'll have startup funds or startup costs. And the startup cost for this particular scenario is $30,000. So you take $30,000 as your startup, and let's say that you're starting a business as a personal trainer. Now, most certified personal trainers, they can safely charge anywhere between $65 to $95 per hour. And if you look at your average work week is 40 hours per week. The average work month comes out to be 160 hours per month. So if a person desired to generate revenue and they were able to book 100 hours at a minimum of $65 an hour, that would produce revenues in excess of $6,500. Now, you have your startup costs, and your startup costs will take care of any salaries, any expenses, any utility costs, telephones, and the like. So you start generating revenue at $6,500 per month. You have your business run on a 12-month period. 12 times 6 would normally give you $72,000. And then you have 12 times 500. That's an additional 6,000. So for the year, a person can generate revenues of $78,000. And the key to this is maintaining a budget, staying within that budget, and then also hitting your numbers. The mom and pop operation, they're not worried about the numbers. They're not worried about hitting the numbers. They're more concerned about providing the service, having a congenial or cordial relationship with the people in the neighborhood, and possibly providing enough funds to live on or get by. The entrepreneur, they must hit the numbers, because if they hit the numbers and they hit the numbers right and legally, they will realize a profit versus a loss. So the numbers are 100 hours per month at $65 per hour. So the entrepreneur must hit those numbers, and at the end of the year they will realize $78,000. You deduct your startup costs of $30,000, leaving you with retained earnings of $48,000. Now, the average person, the average business will take that $48,000 and buy a Jaguar, a Mercedes. But if you're in business, you're in business to build your business and assure that that business is attractive enough that at the end of your 5-year run, somebody will offer you a price to buy your business. So for the first year, we have $48,000 in our retained earnings. We hit the same numbers for the second year. That's an additional $48,000. So our retained earnings for the 2 years will come to, are you ready for this? $96,000. Now, let's do the same thing for the third year. Third year, we're not worried about growth, we're just worried about hitting the numbers again. That's another $48,000, which easily equates to, in 3 years, with expenses remaining the same, $30,000 each year, revenue remaining the same at $78,000 each year, you will have a total of $144,000. That's for your third year of business. On the fourth year, you can increase it, maintain the same level, but you know you have a surefire way of having a profit of $48,000 after you pay your expenses. And you do the same for the fifth year. So if you retain $48,000 for 5 years, you multiply that by 48,000 by 5. You have your 40, carry your 4, you have your 2, incorporate your 4. In 5 years, a person can put together a portfolio valued at $240,000 in cash. That's in cash. Not in inventory, not in buildings, but in cash. And one of the rules of the game is to make sure that you obtain your cash as soon as possible, because $1 today is not worth $1 tomorrow. $1 today is really worth only about 68 cents, and depending on which market you're looking at, that could be anywhere between 50 cents. So $1 is not $1, and tomorrow $1 will not be $1, valued at $1. So what you can purchase for $1 today will probably be lessened tomorrow. A good example is your gas prices. You look at the gas. Gas has risen 42 cents since in 1 month. So people are paying 42 cents more per gallon than they were the previous month. So that's a good example of the need to get your money as fast as possible, because the faster you get it, the faster you can make an investment. The faster you make an investment, if you have $240,000 to invest, it's not at 0.15%, it's not at 0.2%, it's not at 4%. You're normally looking for someone or an investment at greater than 9%, hopefully 12% per year, compounded annually per year. Ladies and gentlemen, that is the discussion for today, and I want to thank you for listening. Have a nice and relaxing week.